Now, this is one of the most important concepts if you're going to have success trading the volume weighted average price, and so be sure to pay attention. As you see a stock like AMC here maintaining in a specific direction over or under the VWAP, you can see for the first 15 minutes or so it was maintaining below the volume weighted average price level. Once we get a break of the volume weighted average price level and specifically a test all the way up to the previous high of the day level here, you can see it broke over the VWAP and moved all the way up to test that previous high of the day level. That is the trend changing. What's up, guys? It's John with Beginner Trading, and we're here today because we are dropping a completely free day trading course. As always, I'm not here to sell you anything. Everything we put out there is free, and I've been successfully trading the VWAP for over 5 years now. I've been doing it so long, I have a ton of different strategies, methods, and concepts to go over with you today, and I think this is really important because I see a lot of beginner, courses and classes for the VWAP or the volume weighted average price, but there's not that much advanced stuff on it, and really the advanced stuff in how to use it, the different nuances behind it, is really going to be what you need to really turn some profits using it. And so make sure to stick around and watch to the very end of this video. We also recently debuted our website, and you can become a member completely free on our site and get the notes from this class completely free with a lot of other really nice information there on the site. So I'll include that link in the description. Don't forget to hit the like and subscribe button to help support our content. And with all that said and out the way, let's take a look. Okay, so just to get this really quickly out of the way, what is the VWAP? The VWAP is the volume weighted average price. It's an indicator used to analyze and identify trends in the stock market and beyond, because you can really use it in futures, equities, whatever kind of market you can think of, you can probably use the volume weighted average price. You can also use it on an intraday basis, monthly basis, and beyond as well, but in this specifically, we're focusing on the intraday analyzation here. With that in mind, we use the VWAP to identify reliable trends in the market. It's really a trend indicator. It's showing you what the specific trend is, if the trend is changing, and where the momentum is coming from with that specific trend. And so this happens from confirmations of a specific direction, holding over and under the VWAP. If we're maintaining an upward trend, we're holding above it, below it, so forth and so on. And we capitalize on the current trend by waiting for big movements in one direction over and under the VWAP. Okay, so we can see the volume weighted average price here. And, just to get the basics out of the way really quick, we're looking for a stock to maintain over or under this specific level. The volume weighted average price is the purple level here. And so we're waiting for a stock or any type of tradable security to maintain either over or under this specific area. Now, when we do that, the stock maintains a specific trend in that direction. And so if it maintains above the volume weighted average price, it's currently maintaining a upward or bullish short-term intraday trend. When it's maintaining below the volume weighted average price, it's now maintaining a downward or bearish intraday trend. You can use this in a number of different ways, but if you really want to be effective at trading the volume weighted average price as a day trader, you need to do a few specific things, and I'm going to show you how I do it now. Now, the main way we're going to use the volume weighted average price to identify a trend is looking for confirmations. You can see in this specific example on the SPY, when the SPY pulls back to the VWAP, the purple area, you can see it bounces generally at that spot. And so traders are actually loading up into these bounces. You can see when it pulls back here, a ton of traders are buying this dip. You can see it pulls back here, a ton of traders are buying this dip. Traders are buying this dip right here. And when they do that, they're attacking that upward intraday trend. One of my favorite pullback areas to buy into is looking for big, drastic moves and then buying that pullback instead. You can see we get some small pullbacks to the VWAP, but one of the most effective VWAP bounces in this specific example is when we get this big, drastic pullback right here. You can see these big red candles come in. You can see a lot of red action, and you can see the volume increase substantially. This is one of my favorite dip buys to pay attention to and really capitalize on in day trading, and the reason for that is because so many traders see this dip happening. When we get these small dips, there might not be as, noticeable as when we get these really large dips to the volume weighted average price. But when the dip is profound and we see some really big red candles and the stock has still been maintaining an upward trend, generally short term, we're at least going to get a small bounce from that. And so we might enter this pullback here, right around the volume weighted average price and look to take profit on, a move like this. And so I'm I'm really not attacking huge upward moves. I'm attacking small moves, but we're looking for big drastic moves to kind of piggyback off of. Now, the VWAP trend is identified using confirmations of support or resistance depending on the specific direction. In this example here, you can see we're maintaining a downward or bearish trend, and with that, we have confirmations on the upside right around the volume weighted average price. Every time the stock or equity or whatever it is pulls back to the volume weighted average price, it gets rejected, thus it's maintaining a downward trend, and this is just really the VWAP showing us it's maintaining a downward trend. A sideways trend that does not respect the volume weighted average price should be avoided at all costs. I think this is one of the areas where most traders that trade the VWAP get themselves in trouble. A downward or upward trend that's maintaining in a really obvious way is super easy to profit from. It's really easy to make money attacking an upward or downward trend, but where traders fail is they can't take their foot off the gas when the trend is sideways. One of the most effective ways to use the volume weighted average price is to identify trend changes. And not only that, not just that you can profit from trend changes, but you need to be aware of trend changes, because if you're attacking a specific trend, say you're attacking a downward trend like you can see here, and it breaks over the volume weighted average price, that might be the VWAP telling you, hey man, the stock is changing trends. It might not be time to hold your short. It might be time to cut your short and rethink directions here because the stock is breaking over the volume weighted average price. And that's generally how we're going to use it to profit from. The big thing I want traders to truly understand about trend changes using the volume weighted average price is that as they happen, you're looking at the VWAP as a line in the sand level. When a stock breaks over or under it, and then starts testing previous highs or lows, price action and momentum will start building towards the new direction, and you really need to be aware of that. Remember how important tests of the previous highs and lows are. If a stock breaks over or under the VWAP and starts testing the previous highs or lows, the momentum is changing directions, and you really need to understand where it's going, because if not, you can get yourself in trouble. You can turn into a bag holder, all that bad stuff. And so you do want to understand what's going on there as a stock breaks over the volume weighted average price, hits the previous high of the day, and then holds support at the volume weighted average price, as you can see here. Now, this is one of the most important concepts if you're going to have success trading the volume weighted average price, and so be sure to pay attention. As you see a stock like AMC here maintaining in a specific direction over or under the VWAP, you can see for the first 15 minutes or so it was maintaining below the volume weighted average price level. Once we get a break of the volume weighted average price level, and specifically a test all the way up to the previous high of the day level here, you can see it broke over the VWAP and moved all the way up to test that previous high of the day level. That is the trend changing. Okay, so the next concept I want to talk about in this VWAP course here is trend changes. The VWAP is really good at identifying trend changes, and the reason it works is because you can simply look at where the volume weighted average price is and where the stock is moving, either over or under it. In this example in the SPY here, you can see we have the trend change occurring right here. Before that, prior to that move, we have the stock maintaining above the volume weighted average price, for about an hour or so, maybe a little bit longer than an hour. And then we finally start pulling back to the VWAP. And some people might buy this dip. I might actually buy this dip, but when it starts to break under the volume weighted average price, I'm cutting the trade and I'm moving on with my trading day, because a stock is always going to change trends occasionally. It's not always going to maintain in one specific direction for the entire day. You do need to mentally prepare yourself for these type of trend changes. And to be honest, these type of trend changes are some of my most effective trades to get involved with. And I'll show you why here. To go back to what we were talking about previously in terms of piggybacking off of big moves, we have this upward trend and we're looking for momentum to show up. And so one of the most obvious moves to piggyback off of is a specific trend change. And so when we have the SPY here and we're maintaining this upward trend and we start to change trends and break below the volume weighted average price, the bearish traders are in control of this specific stock, that's when we can start shorting into pops. And that's what I love to do here as well. My favorite method to do this is just to look for a stock to start to break down. In this specific example, you can see some really big red candles here. And as it starts to dip, some of my favorite things to kind of take advantage of are these little pops after the trend change. So we get some really big drawn out red candles, some really big drawn out red candles. Once that happens, it's becoming more and more likely that the stock is actually going to continue maintaining that downward trend and continuing on the downside. And so how do you capitalize on a trend change that you think is going to continue down? You short into pops, you short into small bounces, and then cover around lows, generally with a scaling system. And so the way I do that here is I wait for this move to happen and I start to short into these moves as well. So we'll look for little bounces. We'll cover once they hit a major support or resistance level. So in this case, just analyzing this chart, we have this pop here. We're going to cover when it hits a major support or resistance level, maybe around this previous low of the day area. Once we hit that previous low, we can take profit and then kind of plan what our next steps in this specific stock are going to be, whether we're going to continue to short into more pops or whether we're going to wait to get a larger bounce back up to kind of help with the extension of the current move, if that makes sense. To look at this example, I think it's a really, really good one on understanding what I'm talking about when I say I'm piggybacking off of bigger moves in the market. If we look at the SPY here, we could see it was mostly sideways. And the way we know it's sideways is because the VWAP is going right through it. It's not respecting the volume weighted average price in this opening range here. And that means it's just maintaining a sideways trend. If we pull out the rectangle tool on Thinkorswim, we can see it's a pretty solid rectangle. You can see it's maintaining a really solid trend in this specific example, a really sideways trend, I should say. And so in that situation, there's not really any edge to take advantage of. There's not really any trend to attack, and you really just want to wait here. A lot of traders can make money when the market is trending really obviously in one specific direction, but when the market does like this, they can't take their foot off the gas and they end up having these big drawdowns in their account that are really avoidable. All you have to do is tell yourself and really condition your brain to see whenever this happens, don't trade it. Wait for this range to break. I love drawing rectangles when we get choppy trends because that's really telling of when the trend specifically breaks, when the trend finally breaks, if that makes sense. And so to piggyback off of this specific move here, what we're looking for is a range break. We want to see this range that we just drew here break, and then we're going to buy a pullback to the volume weighted average price, piggybacking off of that range break. And you can see that happen right here on the SPY. You can see we have this sideways, neutral trend, the VWAP going straight through it. We finally get this big move over the volume weighted average price, breaking out of that sideways trend. And then again, we're going to piggyback off of that move by buying the pullback to the previous highs as well as the VWAP area. Now, this is a really advanced concept that not a lot of other traders really talk about or use, and it's where you take multiple significant relevant support or resistance levels and you look for pullbacks where there's multiple levels in play. And so in this example, we have the previous high of the day here, and we also have the volume weighted average price sitting right around the same spot. And so generally, when we get pullbacks to that area, it's just going to have a lot more support because some traders are watching for this previous high of the day to hold as support, and other traders are watching for the volume weighted average price to hold as support. And so when you can condition your brain to look for, dual convergences or more than that, you can have a really nice support level to capitalize on. And again, it's really something you need to condition your brain through repetition and experience to spot and see in the market. Because generally when we get that happening, we get a really nice support bounce, piggybacking off of this move, and kind of, you can kind of scale out as it starts to push up towards these high of the day areas. At least that's how generally I approach these moves. And to use this latest example that we saw earlier as an example, again, what do we have in that first 15 to 20 minutes? We have a choppy sideways trend. The choppy sideways trend will eat new traders' accounts. And so this is something that more advanced traders understand, which is that when we have sideways movement like this, when we get the VWAP just kind of chopping through it, a lot of the time, number one, this is going to be at the opening bell. That first 10, 15 minutes, a lot of the time is the highest, fake out levels that you're going to get in the SPY or any security really. That first 10 to 15 minutes can be very sideways and choppy. It's not a huge edge in that moment, and a lot of traders just romanticize the open and destroy their accounts trying to trade it. Me personally, I try to identify a sideways neutral trend. Again, just like the last example, you can see we can draw the rectangle if that helps you using the rectangle tool on TOS. And again, we want to piggyback off of this range break. And so once we finally get this range break here, what happens? We look for a pullback. In this case, the VWAP's not super relevant. We're using the VWAP to identify the sideways or neutral trend. But once we get this range break, we can look for a pullback here to buy into and then scalp out on the bounce or just take profit on the bounce and kind of rinsing and repeating it as long as it's maintaining that upward trend. As long as it maintains that upward trend, we will attack the trend over and over and over again and then until the trend actually breaks. The trend will eventually break. Eventually, we'll get a move under the volume weighted average price, generally, not always, as today we basically maintain that upward trend all day, but a lot of the times we are going to get trend breaks. But if it works 2 out of 3, 4 out of 5, 6 out of 7 times, then it's still a very profitable strategy. If you can make money 3 out of 4 trades and then on the fourth one it breaks, then you're still running 75% accuracy, and it's going to be a really profitable system if you can maintain that. To take a look at my actual trades, just so you guys can see I actually practice what I preach here, I'm going to pull up my trades on Thinkorswim and show you guys exactly how I can really attack these specific trends. I'm a scalper, so I'm trading a $30,000 account, and I'm trading very, very actively attacking these trends. And so again, what do we have in that first 5 minutes? We have no trades here. We're not going to attack anything in that first 2 to 3 minutes because there's just not really much of an edge. But once we get this big rejection under the volume weighted average price, that opens us up to attack a downward trend. You can see the stock maintaining below the volume weighted average price, and that gives us the opportunity to attack that trend. And so you can see here, we attack the trend, attack the trend, attack the trend, and then once the trend breaks here, we start attacking the upward direction. So you can see the trend broke. We started attacking the upward direction. When we get sideways action here, where, we're basically running another kind of sideways neutral trend here where we're just getting the rectangle tool out and we can see there's not really any edge. It's kind of chopping over and under the volume weighted average price. We stop trading and we wait for the edge to show up again, which is the edge is just maintaining a really nice, solid, specific direction either over or under the volume weighted average price. And so to clear all this stuff out, once we get that nice upward trend and we get the trend confirmed by showing support in one direction, we're showing support over the VWAP here. So that opens us up to attack an upward trend, and that's what we start to do again. And so you can see, even if I continue to scroll back here, we do this every single day where we're just kind of attacking a specific trend. Here's a day where the VWAP was showing us a really nice downward trend. We didn't really maintain an upward trend. We maintained below the VWAP all day, and we made hundreds of dollars on this specific day scalping the VWAP, just attacking that downward trend until the trend ultimately breaks. And it will eventually break. If it doesn't break, I'll generally stop trading by 11 o'clock market time when the volatility slows down. But once we get a really nice trend that's being maintained and we can see that using the volume weighted average price, then we're generally shorting into these little pops. We wait for it to move down, short into a pop, move down, short into a pop. We cover on the drops, we cover around the lows of the day, and we rinse and repeat that until the trend breaks. Now, risk reward is a touchy topic with VWAP. A lot of traders are just going to use the VWAP as a risk reward level, and I do that occasionally as well, but support and resistance is crucial for understanding risk reward analysis using the VWAP. For long VWAP trading, identifying major support levels below the VWAP can help you figure out where you want to cut the trade. If we look at this specific example here, you can see if we enter around the VWAP, say we're buying a VWAP bounce and we enter it here, we can have this risk reward stop loss level below it, and that way if it cuts under here, traders are going to lose confidence in the upward direction. You have to think of it in terms of psychology here. If you buy the stock right here and the stock starts to pull back and breaks under this major support level, what happens? Traders are simply going to lose confidence, and what happens when traders lose confidence? They sell. And when you get a lot of sales coming in, you get a lot of drops happening. And so important understanding of VWAP is what everybody else sees, where everybody else loses confidence in that current trend, and then capitalizing on it. To look at an example on the upside, you can use the same concept. You can look for a major resistance level above the VWAP to use as a stop loss level. So if it breaks above that specific level, you can get out of the trade. And I like using levels like this. In this instance, you can see a pretty major support or resistance level right here at around 427.25. That's a pretty tight risk level, and so some traders are going to prefer to have a little bit larger of a risk spot, give it a little bit more room. But this is just an example to where if we break over the VWAP and we break over that specific level, traders might lose confidence in this downward trend and downward direction. And so ultimately, when I'm looking for stop losses, that's where I'm trying to set it. That way I don't get stuck in squeezes above it, and I can basically just try to attack that specific trend. Okay, so for this current slide, I want to make it extremely clear. If you want to be a successful trader, you need to condition yourself through repetition. There's a reason that experience is much more valuable than any paid content. And it's one of the reasons why we don't sell a course. We just give everything away for free, is because experience is going to trump that plus some. And so when you're learning to trade the volume weighted average price, just remember to trade small if you're using real money, and really you should be paper trading in the beginning. The more you trade and practice, the better you're going to be at doing the right, correct things. There's a reason that conditioning is important, is because with repetition, you start to do the correct things more often without needing to correct yourself. When you condition yourself through repetition and you try to do the right things over and over and over again, eventually you could become pretty good at it. And that's the point of conditioning and practice. Practice as much as you can. You can use the Thinkorswim on demand feature. You can paper trade. You can trade with really small size, but practice. And before you scale up in size, make sure that you are showing some pretty favorable results before you put big money on the line. It's the only thing that makes sense. It's something that a lot of the gurus won't tell you. They'll try to pretend like this is just really easy and that everybody that buys their course is successful. That is total BS nonsense. Day trading is one of the most difficult forms of investing. It might be the most difficult form of investing, and if you don't put your reps in, you're not just going to be some prodigy that makes $1 million in its first month. In fact, the chances of the exact opposite are more likely. And so remember, take it very slow, trade small, and be ready for part 2. Part 2 is coming out soon, guys. Don't forget to hit the like and subscribe button. Let me know what you thought about this course style content. Remember to check out our website. I'll include that link in the description. You can become a member, get our course notes, get updates on when the new episodes and classes are coming out, maybe get some of the classes in the future before they're dropped on YouTube and all that good stuff. So be ready for that, guys. Check out everything in the description. Good luck, and we'll see you guys for the next class. Thanks for watching, team.